Hello, everyone. Hello, hello. Who's all up? Who's late? Up late this night, tonight. Ah, get some water. We're gonna talk about this fiasco going on in the market today. If this is your first time here, welcome to the Money Level Show, where we think, act, and prosper. Here on this channel, we focus on changing financial trajectories and building legacies. And I want to thank you all for being here with me. I'm streaming live from Facebook now as well, in addition to YouTube, just to see, how many of my Facebook viewers or friends, actually are actually interested in this stuff. So I'm streaming from here just so that they are connected with the content as well. Because sometimes I share my links, people subscribe, sometimes they don't. Sometimes people click play on the video, sometimes they don't. So either way, we're gonna get into it tonight. I want to thank you all for joining me today. Let's see who's here. JT Coin Rings, shout out to JT Coin Rings, y'all. He's actually one of my members. Be sure to click the join button on YouTube so that you can become a member for $6.99 a month. So for a cup of coffee a month, you get access to the interviewers that I actually bring on. You get to ask them questions and such, and then you also get to get shout outs, and then as well as view my interviews early. So there's some other perks in there too, but just want to let you all know that that is always available. So I'm gonna go ahead and kick the intro, and then we're gonna get into this fiasco from today. All right.
Think, act, and prosper. You are now tuned into the Money Level Show.
All right. We are back. We are back in effect, back in action. So I hope you all are doing all right today. I'm doing pretty good. Just trying to get this raspiness out of my voice. But as I talk more, hopefully the vocal cords will loosen up a little bit. Let's see. I got a few people in the chat today. I got a few people watching right now. Be sure to drop your name in the comments if you are there. I love to acknowledge you. I actually got to pull this up on Facebook so I can see what's going on there. I may be glitched out or something, and just that y'all may have me on a freeze frame, doing something crazy. So let's see. Okay, I got one viewer on Facebook. I'm tapping in with y'all too. So yep, we here. All right. So I want to talk about AMC stock. Yes, JT, I'm on the way to 3K. 3K, 3 stacks. Andre 3000 is on the way. So I want to talk about AMC stock today. Many people know about AMC. My story, with the meme stocks, back during 2021 and the pandemic. I remember me and my cousin, we were we were looking at GameStop and AMC, and we were like, and I told him, I said, yeah, this stock is way overvalued. I'm not touching this stock. And I didn't know what a short squeeze was. So a short squeeze when many people pretty much squeeze out the people that are short the stock. So short the stock means that they're betting on the stock to go down. But then when you have a lot of capital come in betting on the stock to go up, it can push the stock price up. So you had, probably millions of people getting in on the short squeeze, and they squeezed out a lot of shorts to where they had to sell their positions at a loss, right? So, or they had to cover their shorts pretty much. So anyways, I didn't know what that was. I missed out on a lot of gains, but to be honest, whenever you see this mania in the market, that you do not need to get in on every single thing. Like I tell my cousin all the time, he's pretty good with options. He sends me plays all the time. Sometimes I win money, sometimes I lose money, right? And I just come to know within myself that I don't need to get in on every single trade. There's always going to be money to be made. That's just one of my rules. Even if I don't make it today, I can make it another day, right? If I want to speculate and play with some options later on, I can do that later on, right? So just because I don't do it today, that doesn't mean I'm missing out on something. And so whenever you just pile into something, it's called FOMO, which is fear of missing out. So you're fearing that you're going to miss out on some gains or astronomical moves, which I mean, you could. I mean, right? GameStop. I mean, we saw GameStop just shoot straight up like a hockey stick chart, right? Shout out to my guy Ken for that analogy. Um, but like at the same time, you can also lose a lot of money. So it's risk with this, right? So we're gonna go ahead and jump into an article from the Wall Street Journal regarding AMC stock. So let's see what happened here, right? I mean, people. It looks like people got wiped out today. All right, AMC stock tumbles after ruling paves way for conversion of APE units. We'll explain more of that. Shares of AMC Entertainment plummeted Monday after judge late last week approved the movie theater chain's plans to convert its preferred equity units called APEs into common shares. So I think AMC, what they want to do is issue more shares to pretty much they're diluting their shares, which I have to get into that, which we could probably get into that in a little bit. Um, the stock fell 35% to $3.44. That puts the stock on pace for its biggest slide since early 2021, when the meme stock craze sent the company's shares swinging. The company's APE units, meanwhile, jumped 18%. AMC's stock plan has sent its shares on a wild ride lately and upset some individual investors who have long supported its shares. Many have been concerned that their shares would be diluted under AMC's plan. So, whenever a stock, so say a company has a certain amount of shares, right? Whenever they issue more shares, oftentimes, I mean, it could be a good or a bad thing, right? It could be, well, you can have a reverse split, which that's what AMC did, which we'll get over to that article, which means like they're issuing more shares to raise more money because they're in debt, right? Sometimes, I mean, the share price is just bananas, and you may have companies like Tesla or Apple doing a stock split to where they pretty much issue more shares because they have a lot of investment coming into the company, and so they issue more shares in accordance with their market cap. I mean, I think Apple, went up to what it hit like 2 trillion at one point. So if Apple would have been at 2 trillion with a certain amount of shares, right, those share prices could be just crazy prices. They could be just super high to where the average person couldn't get in. So them doing like a split, it allows them to be able to get retail investors or average people to be able to afford the shares as well. So that's one piece of it. All right, so we see that pretty much says as well as converting its preferred stock, the company plans to undertake a 10-for-1 reverse stock split. AMC said the moves would allow it to raise money as it contends with a heavy debt load. So AMC is going broke, and people are going broke investing in this company, right? So can we say it's wise to invest in this company? I mean, some people may have believed in it, but I would have probably left the company alone when all of the mania and the chaos became involved in the company. Um so this is what happened on Friday. This is the same article, and so pretty much this article states that the judge approved AMC's plan. I mean, the stock's down 35%. Um, and pretty much it's saying how they plan to enact a 10-for-1 reverse split so that they can grapple with their debt, right? So this is these are things that happen in the market, right? Let's go ahead and look at the price chart of AMC. All right, let's go look at the price. Boom, boom, boom. Let's see. I hate Yahoo Finance's charts. I need to find which site I actually want to use. Let's see if I go to chart here. Yeah, it's a little better. All right, so you can see it just tumbled, right? I mean, so if you had a lot of equity in there, you lost a lot of money. Yep. So it just looked like it just walked off the cliff. So AMC is struggling, y'all. I mean, you can see it's just been in a downtrend, especially since the craze back in 2021 with the short squeeze and everything, which I did profit some off of that. I'm not gonna lie, I did profit, but I had some friends that were actually thinking about holding the stock for a while, thinking that it's gonna go to the moon and it's never gonna come down and stuff. But I mean, if you look at where it's at now, that joint then fell off a cliff. Yo, I would not want to touch this stock with a 10-foot pole, to be honest. So that's my view on it, right? And this is just one of those things where you don't have to be in every trade. This is some of the things that people think that because if they're gonna miss out. They get this fear of like, I'm gonna miss out if I don't get in, and I don't get in, and all these things. And or they get some misinformation, or they get on YouTube and they see somebody just with some reaction on the thumbnail, like, like, and then they just think that the stock is gonna go to the moon, right? It's like that's not being an intelligent investor, right? Benjamin Graham, Warren Buffett's mentor, said he wrote the book Intelligent Investor. That is not being an intelligent investor. You have to know what you're getting into. And some of the people that do speculate or gamble or whatever with these types of stocks, they do know what they're doing, but not everybody, right? So you can't just get on YouTube and, oh, this crypto coin is going to the moon and da da da. Like, you have to assess risk. I mean, because there's a lot of risk in here. I mean, and you don't want to be the victim of a rug pull, or just, I mean, imagine if you at work. Look, let's just look at this, right? Let's just look at this. Many of us work regular jobs, right? Yeah, exactly, JT. The health of the company isn't good at all. So just look at this, right? Let's see what time did this happen. This was at open. This may have been at open. But just imagine you at work and you're invested in this company. You work a job, you can't really be on your phone, you can't trade your stocks, stuff like that. And then you just come home and you open up your brokerage account and then you see how far you're down. Imagine that, right? That would be a terrible feeling. So, like, you can't just park money here and expect these things to just, that they're going to do well. Like, these are things that you really have to watch. Like, if you're a short seller or something like that, that takes a lot more skill than the average person just popping into something thinking that, it's going to go to the moon because they are getting misinformed through someone on YouTube or whatnot. So we have to be intelligent investors. I mean, this stock was pumped up off cheap money from the Fed. Obviously, the Fed was printing money, and many people had checks and everything. They could go and they could just pile in wherever, right? And they could throw a dart at a board, and wherever they hit, that stock was gonna pretty much go to the moon, right? So the Fed was pumping cheap money that's not backed by anything, right? It's not backed by gold, it's not backed by anything. It's pumping cheap money into the economy and into the markets, and these stocks went bananas. But now you're seeing the reverse effect of that. You're seeing the reverse effect. So I want to jump over to one of Warren Buffett's rules, right? This is one of Warren Buffett's rules here. So let's go ahead. Rules that Warren Buffett lives by. This is a Investopedia article. Berkshire Hathaway, Warren Buffett is arguably the world's greatest stock investor. He is also a bit of a philosopher. Buffett pares down his investment ideas into simple, memorable sound bites. Do you know what his homespun sayings mean? Does his philosophy hold up in all economic environments? Find out below. All right, so Warren Buffett's rule number one: never lose money. Never lose money. And rule number two is never forget rule number one. So, like, so it says Buffett personally lost, about 23 billion in the financial crisis of '08, and lost its Revert AAA rating. So he's saying, like, hey, you know, don't gamble. Like it's all about probabilities, right? It's all about, okay, what is the probability that this stock is going to go higher? So what basis do you have for being invested in this stock? Like, what basis do you have? Like, what is your thesis? What are the balance sheets like? What is the CEO like? Have you looked up the CEO? Where did the CEO come from? Does he have a shady background? Does she, was she managing like a really wealthy, successful company before? Like, you have to look at that. How much debt does the company have? Is the company floating? Are they surviving or are they thriving? Like, so you have to look at all those different things because the price of a stock lies, right? So people could look at AMC at, 20 something bucks, 30 bucks and say like, hey, this is a good company to invest in, right? The share price keeps increasing, da 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 da, but the underlying fundamentals are trash, right? And then when you see the stock climb, take a dive like how it did, you really have to you really have to assess like, okay, was this a good company to begin with, right? But you also have the reverse effect. Sometimes you may have a solid company that does not get the same type of bid as an AMC, right? And so if you have a solid company like that, you want to buy them cheap, right? It's all about probabilities. Okay, the company's financials look good. The company isn't overvalued, right? They pay a solid dividend, whatever it may be, right? And let me go ahead and buy some of these shares because this company I think is fairly valued, right? And so when you think about things like that, just because you may see the price down or up, that does not necessarily mean it is a good investment or not, right? So you have to really pay attention to that. It's all about probabilities. So it says Warren Buffett, he's referring to the mindset of a sensible investor. Don't be frivolous. Don't gamble, right? That's a good point. Do not gamble. Don't go into an investment with the cavalier attitude that it's okay to lose. Be informed. Do your homework. Buffett invests only in companies that he thoroughly researches and understands. He does not go into an investment prepared to lose, and neither should you. Buffett believes that the most important quality for an investor is temperament, not intellect. So he's talking about emotion, right? A successful investor doesn't focus on being with or against the crowd. So he's saying, like, okay, when everyone is, Warren Buffett always preaches the opposite, right? He preaches, be fearful when people are greedy, right? So when people are greedy, oh, the stock's going to the moon, yeah, and they're doing all of that, you know, you should be fearful. Like, okay, there's a lot of attention around this stock, like, so for example, like, I mean, right now we have the Fed and Goldman Sachs and Bank of America and multiple different people coming out saying there's not going to be a recession. That has me being fearful. It's like, okay, like there's too many people that are on this one side of the argument, so, and this happened in 2007 when Ben Bernanke said that, hey, there's not going to be a recession. 2008, he's in Congress warning of a recession. Then we had the global financial crisis. So for me, so what Warren Buffett is saying is like, you can't be emotional just going with the crowd, right? And so you need to have temperament. Like, okay, everyone's running away from these stocks. I remember when the crash hit in the pandemic of 2020, like everyone was running from the stocks. And, when that was happening, um, I was buying because I just knew I was not seasoned at all. I just knew like, hey, these companies are cheap, right? I didn't even know what I was investing in, but I made some money, right? Uh, but I knew these companies were cheap, and so like you got to think about it. Whenever you watch a movie and you see a huge crowd of people running from something, let's think of like War of the Worlds, right? Uh, I think it's, was it War of Worlds. These huge, alien robot machines and everyone's just running, like, and so our human nature is to run as well. Like, okay, I'm getting out of here. But Warren Buffett is saying like, you have to be greedy when others are fearful. So you have to do the opposite, you know. And I'm not saying with this company, AMC. This is not financial advice, by the way, but I am not saying that with this company here. Do not be greedy when others are fearful. I'm not saying that, right? But I'm saying just in general, it's about temperament, right? It's about temperament. And if you were, on the train of this is gonna pump higher, blah 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 blah, like, and everyone was on that train, then you should have considered like, okay, it's too many people with the same mindset. Let me go ahead and think about going the opposite direction, and people could have got out and saved a lot of money. So that just is what it is, right? So I just want to chat about that because it's a lot of unwise and just very information out here that's very like, just it's not good for people, especially the average investor. For me, like I'm just a sound minded person. Like I don't just jump into anything. I have to do my research. If someone is like contacting me, pretty much pressuring me, like, oh, did you look into that? Did you look into that? Like I get kind of skeptical of a company or a person or an investment, because I'm like, okay, why are you pressuring me? It's not like I have billions of dollars to like really move a share price up or something. Why are you pressuring me to get in here? So then I get kind of skeptical, So I like to do my research. I do my on my own timeline, you know. Hey, did you look at that company yet? Oh no, I didn't get to it yet. I'll get to it and I'll see and I'll make my decision. Right. Like I don't cave in the pressure like that. So and I just encourage you all to be safe out there. Don't get wiped out in the middle of like inflationary times. Especially inflation. It's still pumped up there. The Fed can't get it down to 2%. Interest rates are high. Interest rate on credit card debt is just ballooning. I mean, same thing with cars and stuff too, right? I mean, we just read the article the other day where Americans hit 1 trillion in debt, credit card debt, and so don't play games and get wiped out in this environment. Pretty much. I mean, that's just wise advice from me because I'm not doing that. Right, I'm investing in solid companies that I know and I have a conviction on, and that I'm aware of, what they're into, right, and their balance sheets and such, and so yeah, I just want to share that. Yeah. So if you haven't yet subscribed to my YouTube, be sure to connect with me on YouTube, because I am always on YouTube promoting my videos. I appreciate everyone that's been subscribing, going on 3,000 subscribers. The subscribers are growing. I have quite a few guests coming up that are very well-known figures. So I'm hoping that we get some submissions of some questions. I will post it in the community tab. So if you want to ask our guests, so on Wednesday, yeah, and I guess depending on where you're at. For me, it's 2 days. It's 10 o'clock here. Um, I have Peter Grandich coming on. Peter Grandich, he was well, he still is. He did a financial advising and investment portfolio managing type work for professional sports players, multiple NFL players and such. Like, so he's coming back on. He's been coming on to multiple times. He's a fellow brother in Christ, and so I enjoy when he comes on and we talk about the retirement crisis, what people need to be doing, what people need to practically be doing to like prepare themselves for what's likely to come down the line. um, so he's coming on Wednesday, so if you have any questions for him, be sure to leave them. I mean, you can leave them in the chat here, or if you want, I will be posting this on the community tab as well on YouTube. And then I also have Neil Howe coming up next week. He is the author of the book, The Fourth Turning, which talks about historical cycles in America. And it pretty much explains where we are today. Actually, let me just go ahead and pull up some bios so you all can see who's coming on the channel. I think that's probably helpful just to get a visual of who's all coming on. Um, So, let me pull up Neil Howe. All right, cool. Here we go. There we go. All right, let me share screen. All right, so these are a couple of the people coming up, of the people that are going to be interviewed on the channel on Wednesday and then next Wednesday. So this is Peter Grandich. Peter Grandich, he's been in Wall Street since the 1980s. Um, he was in head of an investment strategy for a leading New York Stock Exchange member firm. And then he was began to be a chief market and a strategist, a portfolio manager for four hedge funds and a mutual fund that bore his name. His abilities have resulted in hundreds of media interviews, including Good Morning America, Fox News, CNBC, Wall Street Journal, Barron's, Financial Week, Market Watch, and such, New York Times, many others. My channel included. It ain't on here. My channel ain't big enough, but he's been on my channel, y'all, multiple times. And he works with he's done a lot of work with professional athletes, trying to help them manage their money better. So that's Peter Grandich. Neil Howe. This is Neil Howe here. He was the author of the book Generations. He's a demographer, so he studies historical cycles and demography. And he was the co-author of the book Generations. They actually coined the term millennials. So millennials, that term millennials, like my generation, was actually coined by Neil Howe and his partner. And so that's pretty big, you know what I mean? Like a term that everyone uses, right? Not everyone, but a lot of people use. So he authored the book, The Fourth Turning, and he just came out with a new book. The new book is The Fourth Turning is Here. And so we're gonna talk about that on when he comes on the channel. But this is his book, The Fourth Turning is Here. It was a New York Times bestseller. And yeah, so he would be on to talk about many other things that are developing within our nation in America. So you can submit questions for Neil and Peter, coming up, and be sure to tap into that. Other than that, how are y'all doing? How are y'all doing? What is going on, y'all? What has been happening? What has been happening? Let's see. I'm tapping in on the Facebook. Got a couple people here. What's going on? Christy, my cousin, Caesar, Christina. I don't know if you're still watching. What's going on, y'all? What's going on? And then let's see on YouTube. Who's on YouTube right now? Let's see, JT's the only one dropped a comment. I'll be telling y'all, drop a comment, drop a comment, drop a comment, so I can acknowledge you. Like human beings are supposed to do, right? We're supposed to acknowledge people. And this is like one of my concerns with what Neil Howe wrote. Not with what he wrote, but just a fact that he wrote about. He talks about how when we get to the third and fourth turning, how generations become more individualized. So like we become, more separate. We do our own things. I mean, because like life is just drastically different than when I was a kid. Like when I was a kid, we would go outside, we would be, playing with each other, riding bikes, humping. I mean, not humping. I love me that. Hopping fences, freaking, running from dogs, all type of stuff, playing basketball, like shooting off fireworks. We were just like so connected in that way socially. And Neil Howe writes about, when you get in the third and fourth generation of the four turnings, how individualism becomes more rampant. And so now, I go out, so like we go to the gym, right? Everyone got their headphones in, like people. I used to work out at the Y a lot, and people used to talk a lot there. They probably still do, but now the gym I go to now, like you can't even. It's kind of weird even striking a conversation, right? It's just like everyone's in their own bubble. I mean, people mind their own business. JT said, nah. Hey, man, I just fumbled over that word, man. I meant to say hopping. But now it's like people mind their own business, like it's like, okay, like I remember that term, like mind your own business, but I think it should only go so far, when there's like public harm or public, you know, something that's happened in public that isn't right, like someone needs to stand up, and so like I remember I recently talked about the brawl in what was it, Alabama, and people sometimes people would just sit there and just watch that stuff happen. Like, I mean, the initial one when they started beating up the guy that worked there, right? And people would just sit there and just watch it happen. It's like, what is going on with our society? Like, why wouldn't you say something or do something? But they did get involved. It did get ugly, right? I mean, you had some white chairs and everything going on. Um, some assault charges given out, everything, people pepper spray. Yeah, so I mean, lives were jacked up and during that day. But it's just like a lot of times we're so individualized, we think mind your own business and such like that. Like, I'm not that type of person, like I do mind my own business, but I have a limit, right? I have a limit of when something is socially going on. So like even me, like I work in the school system, I've worked in child welfare, I was a juvenile probation officer. Like, so I worked in the criminal justice system, had to present cases in front of, not cases, but present things in front of our superior court judge Keith Harper when he was in office at the time, or when he's in on the bench at the time. And so I have a ethical mindset of like, okay, when I see something that isn't right, I am going to report it, or I'm going to intervene, right? That's just the type of person I am. And I think that the issue with individualism, which I'm going off track, my bad, but I'm just getting kind of passionate about this. But the issue with individualism and how Neil Howe writes about it is like, we become just so disconnected from one another. We get to the point to where we can't hold each other accountable, or where we can't protect, our youth, right? That are growing up and experiencing traumas and such like that. Like, and this is going to just be an authentic, raw, like story I'm gonna tell you, right? So recently I heard about a situation that happened where there was a lady who drove a kid, um, and didn't put the seatbelt on the kid. They got into a wreck, both died, and the kid was in elementary school. Today, I learned that it was at my job. It was a kid at my job. You know, the stepmother grabbed the kid, da da da. And from what I heard is that the kid got in the front seat and was in second grade or something like that. No seatbelt. They both got in a car accident and died. And this is tragic, right? I mean, and people at my job report it. They've tried to report things, but like you have to have some type of social responsibility, when things are happening, and so like this stuff is serious for me, you know. And I just think community is the biggest thing we need right now. Is people to be able to stand up, people being able to um, stand up for what's right. Like like there's just basic things in life that are right, that are morally right, and people need to be able to stand up for them. And so I'm that stand up type person. Um, and I don't shy away from it. I mean, there is times like, there's times where something may be like super sketchy, or something, but for me, I can protect myself, man, and that's just where I stand with it. So I hope y'all being safe out there and everything. I kind of went off on a tangent there, but I mean what I said, and that's just is what it is. Like, I stand by what I said. So um, y'all have a good night. It's getting hot in this studio, and I will connect with you all soon. So y'all have a blessed day. Appreciate Facebook tuning in, however long you tuned in, but I will be streaming from there from now on. Be sure to hit the subscribe button if you haven't yet. Hit this like button. All right, y'all. Peace.